traders, good day. Welcome back to the live room. How's everyone doing today? Welcome. If you guys are brand new, do me a favor, just type in, hey, first time here. That way I know whether or not I need to do an intro or if we can pop right into things today. Because we do have a pretty busy movement, or pretty busy morning. We got some movement in the market. Ollie says, how you doing? I'm doing good. Thank you for asking. I was feeling a little sick yesterday, as I mentioned in the private Q&A. Either my body does not like eggs anymore, or I've got a bad batch. But I was down for the count last night, but feeling better today. So we'll see. George says almost all my pairs are saying go short. Yeah. So we have some interesting movement this morning. We had Draghi speaking this morning, and I want to read you a quote because it inspired a nice little Twitter post with Thor's hammer involved in it. But let me see if I can find it for you real quick. Basically, it's going to be a busy week of news, as mentioned in this weekend's Trading Edge video. But basically, they said the euro is under renewed pressure now that Draghi comes out with the dovish hammer to knock down the single currency. With weakening inflation expectations and flagging economic growth, the signal here is that they're not going to wait and see how things play out further. And that's what we talked about this past weekend, where they're taking the stance where it's kind of like... At first, they're waiting to see how everything went before making any type of decision, and now they're saying, we're just going to probably go ahead and do something. So we saw a bunch of sell-offs in the European pairs. If you trade in the euro pairs, you probably see some big red candles. You're probably licking your lips over some trend continuation opportunities as well. So a lot of that to look on the euro pairs today. Later today, as you can see on your economic calendar in front of you, we have Carney speaking as well at 10 o'clock. That's going to be big. And tomorrow we have our FOMC statement from the U.S., which is going to be big. And Thursday we have for the pound, right? We have our official bank rate and votes for whatnot. So it's a busy next couple of days. So don't be surprised if you see some rapid movement in the market. As far as people trying to position themselves for the next, not the now, especially between the rest of today and especially tomorrow. I think tomorrow is going to be a really, really, really big FOMC statement because the markets are trying to project what's going to happen in July, and there is some uncertainty. And is anybody new to news? We're not news traders here, but we do like to talk about it because it is important. It's part of trading. Anybody new to like understanding news or confused about news? They call them the fundamentals for a reason. But yeah, markets move off of deviation. So basically what that means is when something is expected and news comes out as expected, nothing happens. When there is uncertainty, that's when we see market movement. So let's start on the euro dollar, and we will work our way around. And again, if anyone is new, just say hi and I'll take a quick minute to do an intro. But you can see that the euro dollar has moved past our recent level of structure. We're looking at an inside level of structure right here for a potential buying opportunity. Gave us a nice double bottom and a nice spike up after that yesterday. We have now violated that level. So when I look at my chart now, again, we're overall, we just had a bullish violation as well. So there's not a clear direction on which way we're likely to go here. But there is room to continue lower. Now, the bigger question that you need to ask is, if price is likely to continue lower, where are we likely to continue lower to? And if you guys had to make a prediction here, again, we don't have a close below this level yet, but we won't know that until the end of the day. But if price is likely to continue lower, where would you guys predict price to go lower to? What do you guys think? Les says 3 for 3 day trades this week. Few predictions played out very nicely. But we don't talk about the live account. Well, one day, those day predictions will become the live account and they'll even each other out. Trevor says 111.20s. Let's put some yellow lines in there. 111.20s, looking at these lows right here. 111.25 says Keith, so same level, a little bit higher. Right around this 3-bar reversal. Anyone else? Ali says same thing, 111.20s. Anybody else? Anybody else? Going once, 20 twice. Curry chicken, curry rice. Yeah, that's a decent level to look for. One level that stands out, you may want to be aware of as well, is going to be right here around 111.50s, just because of that rejection we had previously. Now, again, this is not going to be as important as this level down here, but this is probably a zone you should be aware of, anywhere between 111.50s and 111.20s. If you want a little bit more confluence, you can probably actually take a Fibonacci extension tool, invert it, and see if there's any confluence down there. And there's not going to be too much of a 127, a little bit higher. So there is room to go lower here on the euro dollar. Let's go down to the 240 chart, and let's get a closer view of what's happening. Now we go down to the 240. We can start building some more kind of more confluence in that zone. And we don't talk about it, but if you guys, we didn't talk about it on this particular example, but for you guys that are new, this is called the IPDE process. So we're identifying what the market is doing. We're predicting what the market is likely to do next. We are deciding how we want to get involved, and eventually we're executing the trade if it's a valid trading opportunity. So if I want to get more clarity on this level, there's a few things I can do here. I can look at this move, this most recent move. I can draw a 1-to-1 measured move. You can see that's going to put me below that level, so that's not really going to help with this prediction. I can also take a Fibonacci extension from my swing high right here to my swing low and see if that gives me any clarity. It's going to give me the same exact thing as the inversion, because in this case they happen to be the same leg. But that's the process in which you want to take. You want to just keep drawing these fibs on. You want to keep drawing these harmonic moves and see if that gives any more clarity. Now, I can tell you something. The lower time frame presents a clearer picture than the higher time frame, right? We go to the daily, and we have those two levels I told you about. You have that 3-bar reversal level. You have that inside level of structure, a nice little zone right here. Keeping that area in mind, do you see anything different on the 4-hour? Nope. Well, we have a nice accumulation zone right down here. Do we not? Look at this. Price action comes down. What do we get down here? Nice little sideways channel before the breakout. So a much clearer view of what's at that level here on the 4-hour. So what you can do is you can dial down that zone and have a much more specific target area. Now looking between 111.44s, I guess technically these lows right here, 111.44s and about 111.16. Make sense, guys? Do you see the difference between the higher time frame and the lower time frame? That channel does not exist on the higher time frame. It's simply a doji. However, that doji, which we know is indecision, the market bouncing up and down and up and down, gives us a nice clear spot here on the lower time frame. Also lines up with that wick looking to the inside. So a much clearer zone here. So yeah, certainly a level we can project that price is likely to go to. So now we have a prediction on the direction of the market. We have a prediction on where we're likely to go. Now we have to figure out, can we get involved? There was a very good opportunity on the range bar chart this morning, which I wanted to take ever so badly. I don't know if any of you guys are watching it. Unfortunately, I cannot day trade before my day trading hours, which starts at 7:30. So I'll have to wait for a secondary chance. But was anyone watching the range bars this morning? Beautiful opportunity. No. Well, we'll see it when we go down. And hopefully we get a secondary opportunity. So going down to the 60-minute time frame here. And let me just make sure I have my notes up. That way I can know exactly what time we're looking at what. So when I post the recording, I can share it with you guys. 60-minute chart here. What do you guys notice on your screen? We had the obvious breaking close above. Here was our double bottom for yesterday. Here was our 26.18. It was actually probably a profitable 26.18 if you took it as well. And then we had the breaking close below. And what happened directly after it? What do you guys see on your charts? Yep, we had a retest, right? Lower low, lower close. Retest right in the structure, right into that 112 even handle. And now we're continuing our way down. So a classic pullback trade, a classic pullback trade. Now here in the 60-minute, unless you're doing an aggressive limit order, which I would see no reason to do, probably no way to get involved. So from a swing trading perspective. Day trading perspective, you're in the 15. I wouldn't see any way that I can get involved. Maybe the lower low, lower close right here. Down at 111.92s. Not going to give you a good risk reward because you're so far away from those highs. 5-minute chart. A little bit of a better view here, right? You can see we have that retracement right here. Your lower low, lower close is a little bit higher. 111.93 is actually about the same. So it's not really giving you a great risk reward, right? We talk about a few ways to trade this. Taking targets at a retest of the lows or taking targets at the extension. Depending on how you trade it is going to dictate really your risk reward, right? If you're someone that, how many of you guys take targets at a retest of the lows? Or initial targets, I should say. Right? If you're in a situation like this and you need to get above these highs, guess what? Is this going to be an opportunity that you can take? Probably not, right? The risk reward could be the greatest opportunity in the world. The risk reward is going to be, the risk reward is just not going to be right. If you're someone that trades the extension, Keith, are you saying you trade the extension or not? Or you trade with initial targets, I guess, if you use 2 targets? You trade the extension or you trade the retest? Retest, yeah. Now, if you trade the extension, you could probably make it work. If you trade the retest, just not going to be doable. However, when you go down to a range bar chart, which is my preferred chart for day trading, my preferred chart for trend continuation trading, you can see different story, right? Same concept, right? Pull back to the 112 even handle. Look left, structure leaves clues. And this is a perfect, oh man, again, I was looking at this morning and I can tell you what, part of me wanted to break my rules and just not tell you guys. I suppose that wouldn't be right. But part of me did because I was waiting for this opportunity, kind of like George. I did my market analysis this morning and I'm like, ooh, this could be a short. This could be a short. This could be a short. But the cool thing that we have here is we have, and obviously it's news based, but we have a level here, and this kind of goes in when we talk about structure swaps, right? We have a level here which was clearly, I think, at least in my opinion, clearly a good buying opportunity. Would you guys agree? You can't see it here, but if you remember on the higher time frames, this was at structure, right? Double bottom, previous structure, clearly a good buying opportunity, right? I think if you do any type of lesson on double bottoms, it was a symmetrical double bottom at previous structure. I don't think it can get, the target projection wasn't great, but as far as holding at that level, I think it was a perfect opportunity. We saw the market react off that level in a bullish way, right? We broke above the peak of our double bottom, right? We even saw the 26.18 come down and retest, right? More signs of bullishness, right? And then news comes through, we break that level, boom. We break a powerful level. In order for that level to get broken, it means some pretty good selling pressure had to take place. Good chance that once that level at previous level of support is broken, it will return to be a level of resistance, and that's exactly what we saw, right? A few other things we had here, right? If you want to bring in some fibs, we had a 382 Fibonacci, I believe. 382 Fibonacci right at that level. And we had an RSI swap, right? You guys know I feel strongly about these RSI swaps. Now again, my RSI is a little bit faster here on the range bar chart. That's purposely done. But we go directly from oversold to overbought. I love that for trend continuation opportunities. For me, this was a grade A opportunity. Everything I want to see. Just about a half an hour too early though. But anyway, so you still have if you're an aggressive enterer, right? You still have your lower low, lower close right here, right? The only difference is because it's a range bar chart, because it's I guess in a way, a smaller time frame, or I should say because the bars print differently, instead of getting that lower low, lower close down at 111.92 like you did on the minute chart, you get it a little bit higher, right? And that little bit higher makes the difference between having a good risk reward and a bad risk reward. Now, if you're entering the trade right here, right, your reward looks something like that, while your risk looks something like this. And for me, at least, I know everyone's rules are different, whether you need 1-to-1, 2-to-1, 1.51, whatever it may be. This is a takeable risk reward for me because it's more than 1-to-1. So this was a great setup, guys. This was a great setup. There still can be alternative setups. There's two things that could happen, right? This could turn into a complex pullback, right? Maybe the market does something like this, and we get a complex pullback and a secondary chance to enter. Wouldn't be as great as the first situation, in my opinion. We know that in a strong trending move, the pullback should be what? Longer or shorter? They should be shorter, right? We know that in a strong trending market, should we see kind of quick, deliberate moves, or should the market play around and wobble a little bit? That's a tricky one for you. Wobble, baby, wobble, baby, wobble, baby, wobble. Wobble, baby, wobble, baby, wobble, baby, wobble. Yep, quick, deliberate moves, yeah. Quick, deliberate moves. So we'll see. Now, the other opportunity is this, right? Because our higher time frame analysis projected a move down to, what was that level we were looking at? 111.40s. There could still be room to take advantage of this, right? We can still do this. And this is something I do in my time frames or on my charts, is I draw a line on where I think we can go to, right? So that yellow line down there, right? We can click on it. We can make it red. This is the ending expectation of my move, right? This is where I project price to go to. So what that means is that anywhere within this level, I can still get involved, right? So if we happen to break this level, something like that, and we happen to pull back, what does that offer me? It's still a trading opportunity. Yeah. So, yeah, wasn't able to catch the first one up here, right? But I can still catch the second one. We may do this. I can still catch the third one, right? There still may be opportunities. Now, again, we don't know. Not counter trend, but no, we don't know. The market could just slam straight down there. You know, you never know what the market's going to do. But the point is, we don't necessarily want to give up on this trade. We don't want to say like, man, I missed that move and I'll never get it again. Well, no. There may be other opportunities. The market may wiggle some more. And we just have to be prepared to take advantage of it until it gets to that level. Once it gets to that level, then my mindset changes. Now it's like, okay, well, start the whole process over. Identify. Price has gone to the lower level of structure. Now we're on the counter trend alert. So keep an eye on euro dollar. And again, a lot of these euro pairs are like that because we've seen bigger moves. This is one that had a little bit more room for potential. But keep an eye on euro dollar. There still is opportunity to get involved. So keep an eye on it. start going through your process and understanding if you're someone that's trading or demo trading, start trying to understand what do you need to happen. And it's very important. At this point in time, you should know, or at least have a very clear idea of exactly what you need to take the trade. So you should be looking at this right now and I say, okay, I need price to go overbought. I need price to go oversold, and I need a retracement. Retracement has to come to a level of structure, has to be an RSI swap, lower low, lower close, right? Double top, whatever you need, right? You should be going through your game plan in your head, and you should know exactly what you need, because especially if you're watching the range bars or the lower time frames, it moves quick. It moves quick. It moves quick. All right. Any questions on euro dollar? Euro dollar. Euro dollar. All right. Let's go to another similar case. Let's go to euro yen next. Real quick, he says the kill zone on the 5 minute to the left. To the left, to the left. Would be 120 or 112.11 to 112.16 on a regular chart. 112.11 to 112.16 on a regular chart. 112.11 to 112.16. Why would this be the kill zone on a regular chart, Keith? It's the green candle. This one in here? The one inside this after this big spike down. Okay. Well, the kill zone. I mean, you can make that a kill zone, but remember, your kill zones are going to be from your swing points. So your kill zone, if you're looking at this as a move that looks like this, right? A move down and a move up like that. Your kill zone is going to be from that swing low to your swing high. So your kill zone would actually look like this. Now you can measure that. You can measure that as that's the zone you're interested in, right? You're interested in this particular zone in order to get short, but your technical kill zone is going to be from your new structure low to your outside return. So it would be more from 112 even to those highs at 112.16s. If you're looking at this area as being your pullback. Make sense? So not the top of that candle, but the swings in the market of that previous move. Euro yen wasn't as attractive. Oh, I'm looking at the closed green candle to the high as the kill zone. Okay, yeah. I mean, if that's how you measure your kill zones, then that's fine. But remember, I mean, officially, technically, how we're measuring our kill zone is we're looking for the swings in the market. We're looking for those swings in the market, right? Our previous lows to our outside return. So that's going to be our kill zones. If you want to narrow down that zone and say, hey, that's my personal kill zone as far as like where I would want to see the market go to, that level, that's fine. But just from a terminology standpoint, that way we don't confuse new traders. When we mention kill zones here, we're talking about that classic kill zone where we're looking for reversals at. But yeah, that's fine if you want to say, hey, this is the zone that I've pinpointed and want to want to see hit. Nothing wrong with that at all. All right, let's go to Euro Yen. Clear that up before I get a bunch of emails saying, Akil, I went through the course and I thought the kill zone was this. Because that's typically what happens. I thought you said the kill zone was new structural at outside return, but now it's the highest close to the highest high. And then I got to respond, well, what had happened was, we had some really good conversations on the chat yesterday. We got some traders that are working hard. All right, so Euro Yen on the daily. Similar situation, not as good as the Euro Dollar, in my opinion. You can see that we're approaching previous structure lows. So we're a lot closer, that 121 even handle. We're a lot closer to the extremes of price action than we are in the Euro Dollar. And what this basically means is that the room for opportunity isn't as great. And that's something I just started working on the PowerPoints for the new course, and that's something that we're going to bring up in one of the first sections, is just understanding the differences between, hey, there's a trading opportunity, and then there's a trading opportunity that actually provides opportunity for profit. Because you'll see a lot of times in the market that sometimes you'll have some great opportunities on the board where you'll look at that and be like, man, price is definitely going to go short from here. And then you ask yourself, well, where would we like it to go short to? And it's like 2 pips away. And you're like, not enough room for profit. And that's an important filter. Because believe it or not, some people hop into trades early and then realize that it doesn't have the legs that they thought it would be. So not as great as an opportunity here on Euro Dollar, or Euro Yen, excuse me. Perhaps what may be even better is waiting for the counter trend opportunity, the structure-based buy. But you can see that kind of same setup as Euro Dollar. We broke previous structure lows here. The projection is that we would continue lower, right? Our absolute lows are down here at 120.80s, right? We have a 121 even handle was in there as well. If we want to build in some confluence, ABCD is going to be past that level. I can tell you that already. But we can take Fibonacci extension from our swing high to swing low. Back down, you can see we're at a 127 already. I don't really care about the 1414. The 1618 is lower, so not going to be a lot of Fibonacci confluence there to help us make our projection. So not as great as of an opportunity, but let's continue down. Maybe some legs opening up on the lower time frame. But you can see same type of setup, right? Same type of setup. We had a little bit of a consolidation here, a little bit of a hold. And then boom, we ran through. We got a retracement to these inside lows right here, but not a retracement to our most recent lows. And that's why it's slightly different than the Euro Dollar. A little slightly different than the Euro Dollar, so not as good of an opportunity. But if you're looking for shorts, I think you should look for a break of this level. And then look for that pullback trade in anticipation of going to that lower level of structure. Why do you ignore the 1414 fib? It just doesn't have any relevance to me. It's just irrelevant. It's not important to me. The Fibonacci extensions that are important to me are the 127 and the 1618. I keep the 1414 there because I need it for cipher rules. But if I didn't need it for measuring cipher patterns, it wouldn't even be on there. Just like we don't even do it. There used to be a 707 that I was taught. I never used that either. So just has zero importance. I stick to the main ones: 127, 1618, 113 if I'm using for stops. But yeah, 1414 just doesn't. Yeah. Now feel free to keep it on as a minor fib and use it. I just rather look for the major points. And same thing with same thing if with Fibonacci retracements. I don't really care for the 886. The 886 only has one purpose for me. What do you guys think that purpose is? Bat pattern, yeah. So like if you see me just doing regular analysis, and I'm not looking for any type of confluence at the 886. It would mean, it would by itself, it would mean nothing for me. But it's on there because of it's a completion point, the decompletion point for bat patterns, and I'm a bat pattern trader, so I need it on there. That says typically always lines up with structure as well, which makes it a bit meaningful, a bit less meaningful. Yeah, it's so deep that it's basically at your 100, which, and your 100 is always going to be the top of your swing. Yeah, so I mean, even the 786, I pay attention to the 786, but the main Fibonacci's for me are going to be 618, 3D2. I do enjoy the 50% simply because I know that's a psychological level. I'll tell you what, I never tested it, but I never even looked at it, I should say. But it would be interesting to see what I know it in quarters and halves make a big. They're big in the stock market. They're not as big as in the forex market, but psychological numbers, zero zeros are big. It would be curious to see what quarters and halves, as far as Fibonacci levels, and I guess they're not technically Fibonacci levels, but quarter and half retracements look like as well, meaning like pullbacks to 25% or 33.3%, something like that. Just a thought. It would be interesting to see, but yeah, no real relevance for me. I'm also getting I'm getting further, as I evolve as a trade, I'm getting further and further away from Fibonacci's. And I don't know if it's because I can actually just see them on my chart, so I don't need to draw them in, or it's because I'm more in tune with price action and structure. Probably a combination of both, but I used to be really, really, really big on fibs, like drawing them from everywhere and big old messy fib cluster chart. Now I'm a lot more purposeful. I've replaced the Gatling gun of Fibonacci's, just everywhere, with the rifle. Replace the Gatling gun with the rifle. Okay, so Euro Yen here, lower time frame, not impressive at all. I'm not impressed by anything on this pair. There is room for a continuation lower. As I mentioned, you'd want to see like the euro dollar, you want to see a violation of these lows and then look for the next pullback. But I do think the opportunity to continue lower is limited. So it's not the greatest opportunity in the world. Not as good as I first thought it was this morning. Questions on euro dollar? Euro yen, excuse me. Euro yen. Keith says bearish bat on the euro yen on the 15. You want to give us an X leg, Keith? I'm pretty sure I know what you're looking at, but we want to get in the habit of giving out X legs. That way our traders can actually figure out what you're looking at. I'm going to guess 121.70, but you said 15. Yep. Oop, aren't you? Oh, clear. I know what you're looking at. So Keith's looking at X to A to B, B to C, and a potential CD completion up there, 121.62 for a potential bear bat. Questions on euro yen? It wasn't a guess. I knew what you were looking at, which is a good sign for a pretty obvious impulse leg. If your trading buddies can guess what you're looking at, it probably means that impulse leg is solid. Probably means it's solid. All right, let's head over to, I'm going to go to dollar Canada, a little breakout action on dollar Canada. Not at the greatest level, but it's there. Dollar Canada. USD CAD, aka the loonie. We're getting a little pullback from it as well, but not the greatest level. But let's delete all this kind of madness on the loonie. Oh, no, 1 day, Akil, 1 day. Let's delete our chats and start fresh. Dollar Canada, all right, we did come down to retest the previous structure lows here. We're seeing a bounce back up. We talked about a break of these highs and potentially retesting the 135 level, and we're running into a little bit of minor resistance here. You'll see that minor resistance a lot clearer as we go down to the lower time frames. You can measure out, right? Boom, our swings, bow, here. We're coming right up into our previous swing. Now, if this were any place else, this would be a fantastic high and tight flag, right? Directional movement, tight sideways shuffle, look for the breakout. However, the one negative is that it's right before structure instead of right beyond structure. So, despite having the breakout, which we did, there just wasn't a lot of room to continue higher, right? This makes sense. It was a breakout and a good breakout pattern. Unfortunately, it was right underneath the ceiling, right? So it's like, hey, jump as high as you can when you're 2 feet away from the ceiling. So as we talked about this weekend, potential for a head and shoulders. If we see a break above that level, again, looking for a move up to 135. Doesn't have to be a head and shoulders, but any type of break above that level would have me looking for a potential move to 135. So I don't particularly care how we do it. We can pull back from this level and put in a classic head and shoulders pattern. We can break above. This would actually be preferred. We can break above here, pull back, and look for a move up. I don't care how it happens, but that is what I'd be looking for in the market. A violation of that level and an opportunity to get long. Let me look at AL's bat real quick. AL's looking at X2A. Where are you at right here? Get over. I guess that is the high. X to A, A to B, B to C, C to D. Right in there, 134.92. Keith says, Keith said, I would like it to pull back to the 133.50 area. So looking for a pullback to 133.50. Now, are you still looking for a pullback even with the break of this flag pattern? No. So what do you need to happen, or is the trading idea long and gone? Short here to 133.50. Okay, so what's the reason for shorts? Walk me through it. Walk me through the process. Okay. You've got the bat. Also structure. So what is the main what type of, is it a bat trade? Is it a CTS trade? What's the trade? That's what I want to know. So it's a structured trade. All right. CTS or just, okay, so what, structure-based trade, okay. So what was the reason for executing the trade? What made you pull the trigger short? Structure to the left. Okay, what was the entry reason? What made you execute the trade? So I see the structure, I see the RSI, I see the bat. I did miss this bat, by the way, so I am not involved, but it is a valid bat. But what made you execute the trade? Valid bat, in my opinion, I should say. Good risk. No. Well, see that, and so here's the red flag, right? We're dancing around. You have yet to give me a reason for why you entered the trade. I don't care about good risk reward. That's fantastic. I understand. Great risk reward, great structure, RSI. What was your reason for entry? What needed to happen for you to click the sell button? And because you haven't given me an answer, that's a red flag. It makes me think that you don't actually have a rule for it. Would I be correct in saying that? That you do not have a rule for entry? All I need is the RSI. Okay, so as soon as the RSI goes overbought and price touches structure, you just sell it the second that happens? If okay, so let me know this. Okay, so I'm someone that is trying to follow your rules for this trade. How do I know when to take the trade? How do I know when to press the sell button? Imagine that I'm someone, I'm blindly following your trade setup, I'm reading your rules. How do I know when to sell? How do I know when to push the sell button? Explain that to me. Again, I know nothing about trading. I'm someone, you dropped your trading plan. I picked it up. I'm following it. How do I know when to hit the sell button in this scenario? I forgot who I was talking to the other day. I think it was one of the newer traders. But they were sending me a message where they're like, Akil, I really like the idea of when you say like, my trading plan should be written in a way where I can give it to like my grandmother and she can understand it. It's really helped me kind of solidify my rules. And this was the same thing we did with Chris Mills, who's become an excellent trader, just polishing those rules. But I asked because right now, if I were a trader, if you were teaching me, Keith, and you were explaining this trade, you have yet to explain what I would need to enter the trade. And I think our group can agree. And if you can't explain what you needed to enter the trade, it makes me believe that you didn't really, that you may have entered off of either a feel or that you have rules, but they're just not polished enough. Because it shouldn't be, if you have solid rules, it shouldn't be difficult to say, why did you enter? And it doesn't really matter why you entered, but as long as there's a reason. Does that make sense? However, every time I ask you, it's just like, oh, RSI went overbought, price moved in the structure, risk was 1-to-1, but none of those are a entry reason. So I just want to make sure that you have solid rules for, okay, I know what you need. I know you need RSI overbought. I know you need structure. I know you have a bat pattern, right? You have all the stuff that is needed for it to be a good trade. But what is the thing that tells you enter versus not enter? That's what I would like to know. What was the thing that you needed to finally hit the button? What did you see on the chart that said sell now? Sell at this specific price point or this specific candle. What was that thing? Or is that still a little bit of a cloudy area? And if that's the case, that just means we have to tighten that part of the trading plan up. And that could be the final, who knows, that can be the final straw. You have your pullback, which gives you a kill zone. Price has come back into the kill zone. RSI has gone overbought. Okay. Agree. So what do I need to enter the trade? What do I need to push that sell button? What is my green light to hit that sell button? What needs to happen? So maybe this will help. So, Latch, are you here? There you go. Okay. I was going to ask Latch, what is your entry reason for a structure trade? Keith says the lower close of the doji or low. Well, which one? Now don't give me both. Which one did you use in this case? Was it a lower close? Was it a lower close? That was it. It was the doji candle or the lower close. Which one? Just so I know what to look for when I'm scrolling through. It was the doji candle. So if price action pulls back into structure and RSI goes overbought, all that stuff is met, right? If I get a doji candle, then I enter short next bar market. Okay, see, that's what you need in your rules, right? Now, again, I'm still, I hope you understand, but I still doubt the specifics of your rules because it took us 15 minutes to talk about it, which means I don't actually think it's in your, and I hope I'm wrong, but I don't actually think it's in your trading plan, a rule. I think you finally got pushed into a corner where you had to think about it enough to create something, which is not a negative. Because now you have something going forward. But that is an entry reason, right? Because the question is, if you don't have a reason to enter a trade, how do we know when to get into a trade? Well, there's one thing we can go off of. We're going to go off of feel, right? I feel like it's time. And what happens in the long run when we execute trades off of feel? Does it end good or does it end bad? It ends bad, right? So you have all the analysis in place. The last thing you need is your green light. What do I need to happen to enter a trade? Right? Everything's lining up, blah, 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 overbought, pullback, blah, 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 right? If I get doji candle, then I enter next bar market. If I get lower close, then I enter next bar market. If I get double top, double bottom, whatever it may be, then I enter next bar market. It doesn't really matter what it is as long as it's tested. The fact is you have something that tells you now is the time. Now, honest answer. Was that really in your plan or did you just come up with that? I promise I will take your word for it no matter what. But honest answer, was that the entry reason the entire time, or was that kind of like after you thought about it, that's kind of my rule? That's the rule I use for this, but maybe not a consistent rule. I used to love my trader assessment days. Oh, we used to get after it. This was kind of this is what we would do in our trader assessments. We obviously we deal with a lot of traders that just kind of needed, and some were very, very struggling. Some needed that one thing, and we'd eventually just like, it's like, I guess like a different form of torture where we'd get the answer eventually. We know it. We just got to keep probing and prodding until they give in, and that's what changed my trading career around as well. I told you guys my story. And Jason Stapleton just tied me to a chair and just got the answers out of me eventually. But I'm gonna guess it wasn't actually a rule. But now that you thought about it, maybe it's a rule going forward. But of course, you wanna make sure you test it. You wanna make sure you test it. All right. So back to trading. Now that we made it through that awkward moment, I apologize for you guys that felt awkward about that. But that's the best way to help a trader. We're not in the business of buttering people up here and being, oh, it's okay, that's good, just do it that way. No, we want to build and mold successful traders, and sometimes that's what it takes. And if we can help a trader find that last thing where they realize, like, man, maybe I don't have a rule for entry, that's something I need to work on, and they go back and they find a rule, and that's the final piece of the puzzle that kind of puts a trading plan together, then we've done our job. Or some people just get offended and never come back. We've seen that before as well. Either way, I don't really care. I'm here to do a job. I'm not here to make friends. Many of you guys have become friends, but I'm here to do a job first and foremost. It is harder to explain, just need to make it, well, and that's the fact. If it's really hard to explain, Keith, then that means the trading plan needs tweaking. A trading plan should be clear, cut, and simple, right? You want to hear a trading plan for this, right? If price action pulls back in the structure, then wait for RSI to go overbought. If RSI goes overbought, then look for lower low, lower close candlestick formation. If price gives me lower low, lower close candlestick formation, then enter next bar market. If I'm in the trade, then stops go 1 ATR above previous structure highs. If I'm in a trade, then targets go 127 or 382 Fibonacci retracement, whatever it may be. Not too hard. That's how, if then, just like we teach in the course, if then. It should be like programming a computer. And if I give that trading plan to Ale or Debs or Lynn, whoever, they should be able to follow it. Lynn should be able to look at my chart or look at my trading plan and says, okay, Akil says, all right, here's my structure because I know how to draw a kill zone. All right, okay. If price action comes in the structure, okay, boom, then look for RSI to go overbought. All right, okay, RSI is overbought. Okay, next plan. If RSI goes overbought, then look for lower low, lower close candle. Okay. All right, got a higher candle there, no lower low close. Okay. Are we lower low, lower close? Nope, not quite yet. Nope. Nope, still not. No. Lower low, lower close. Let's see, we get it here. Or Doji, whatever you said you needed. Let's say Doji was the example you gave. Then look for Doji. Boom. Not too hard for them to follow. Assuming they have to know what a doji is, they have to know what structure is, they have to know what the RSI is, right? Assuming you know all that stuff. But not too hard to follow. It should be simple. It should be simple. It should. I don't see there's any. There's even the most extensive way to trade could be made simple just by a series of if-then statements. All right, doesn't matter if you can need 100 things in a trade, right? You may need 100 triggers, but if you write it in the if-then syntax, it should be easy to understand, right? Would you guys agree? It may take you a long time to get through. If MACD crosses, then look for ADX. If ADX is at this level, then look for stochastics. If K line hooks above S line, then look for. It can go on forever. But it should be a process. It should be a process. And that's what's going to keep us consistent in the market. All right, so let's go down to the 60-minute here on Canada. Again, we got our breakout of our flag pattern. Typically in this type of breakout, you would look for a pullback and an extension. However, Again, we're right at the ceiling. I don't want to buy at the ceiling. Again, I do think it's a good bat pattern. I cannot get involved because the X leg was penetrated. I didn't catch this last night. Again, I didn't really do any analysis because I wasn't feeling great. So that stinks. But my rules are if we violate X, if we pass X, I cannot get involved. We have technically spiked above X, so I can't get involved. But again, what I would like to see for a bullish move is a break above that level. For a bearish move, what do you think I would like to see for a bearish move? I'll give you a clue. A break below that level. Yeah, I like to see this as a false breakout. We get below this flag. This is going to be, in fact, I take that back. I still wouldn't look for a bearish move there, mainly because this is setting up to be a head and shoulders. I mean, maybe a short-term bearish move. What are we, 133.90s down to 133.60? Okay, so a short-term bearish move. A short-term bearish move, but nothing long-term because of that head and shoulders. Why can't you get involved? Because the pattern is violated. Yeah. So we've spiked above X, which is a violation of the pattern for me. So I cannot get involved. Just barely spiked, but our highs have been taken out. So that stinks. Because this was a near miss. This smaller one was a near miss last week too. So if this thing rolls over, that's going to be two pattern opportunities on dollar Canada. I didn't have a chance to get involved in, which stinks. So yeah, I mean, if we see a violation of this flat pattern, there is room for a bearish move. Just got to be cautious with us coming back into this level, because again, this would be the setup for a head and shoulders, perhaps a little bit higher, right about here, 133.68. All right. Any questions on dollar Canada? There's not going to be much on the lower time frames. Well, let me take that back. Maybe a small cipher. If anyone's looking to get long, I don't think we're going to get to that 127 actually. Nope. Any questions on dollar Canada? Ale says hopefully it'll drop to the 3.2. Hopefully. Yeah, head and shoulders. Yep. Left shoulder, head. Right shoulder, yep. Knees and toes, knees and toes. All right, let's gear up for our first break. We'll put 13 minutes on the clock. We'll take a 59-minute break. And we'll come back and make our way around the markets. All right, gang, we're back for round two, the deuce. Welcome back. Real quick, just want to give a shout out to Keith for being such a good sport. For you guys that have been with me for a while, you know we'll often do that from time to time. I love when you guys interact. I think it's great. I think it shows a lot about your confidence to be willing to share ideas. I know many people are scared or are timid because of that reason, where there's like, I don't want a Keel to rip it apart. I don't want another trader to see me write something on the chat and tell me that I'm wrong. That is a normal fear. But understand that this place right here, right? This place right here, it's a little bit different than what you're used to on the internet, right? This is not an environment where you're going to be made fun of. This isn't an environment where you're going to be criticized in a negative way. And I know that our defense shield is often up because that's how most of the world is, as far as trading forums, as far as social media, right? Social media can't do anything, right? You get body shamed for posting a regular picture of yourself. You get body shamed for posting someone that's, you get body shamed for everything, right? And the same thing is with success. You get yelled at for being successful. You get yelled at for being scared. It's like a no-win situation. This is a win-win situation where everyone here wants to help. And when I mean everyone, I mean I haven't seen a single person that wants to see you fail. They don't typically last here that long. So don't be afraid to type stuff in. Don't be afraid to put your idea out there. It is a win-win situation. The worst thing that will happen to you is what you just saw with Keith, where someone will come in and question you. If you have the right answers, then you have nothing to worry about. If you have the wrong answers, or maybe you're missing a part of the answer, someone will inform you of what's missing, and that helps you get better. So either way, you get better. It's a win-win. So I don't want you guys being afraid to do it. And again, proud of Keith. One of the reasons I like doing that, Keith, and so happy you were a good sport, is because I know people are a little bit timid, and I know people are dealing with the same issues, yet they're afraid to kind of put it out there. So when they hear someone else that's like, man, like I was thinking the same thing, but I just didn't want to type it in. It not only helps you, it helps maybe 5-10 other traders on this platform as well. So I always get excited over that. And it's much better. Again, we've had some times in the past where people just they're so closed-minded that they put up their defense shield, and they go into fight or flight, and it ends bad. Do I ever know what happened to that guy? I asked OG a while ago. He said, I don't know. He's still missing. You guys know what I'm talking about. I blame Jason Greystone. I think he gave it to him harder than I did. I don't even remember what the conversation was about. What was it about? Was it multi-time frame analysis? Higher time frame analysis? I just remember we went after it for like 2 straight weeks. And then apparently he was going after it in the London room too. He got sick of me, so he was like, "Let's go somewhere else." And then me and Jason have the same exact philosophy on trading, so he got the same business there. He got the same business from Greystone. I like to think Greystone's a little bit more aggressive than me, so he didn't make it out of London. But it was interesting. It was just it was someone that just didn't want to hear it. And it's okay to have a difference of opinion. That's fine, but it was a little bit more than that. George says I immediately exit now if I hear anyone talk about higher time frame analysis. Gosh. Well, I'm telling you, I spent some time in the new course talking about higher time frame analysis just for that one purpose, the importance of it and how to use it. Maybe I should delete that. But let's head over to, let's go to New Zealand dollar next. I had breakout on my radar. So far we looked at euro dollar, euro yen, and dollar Canada, if you guys are just coming in. Busy news week. Draghi dropped a hammer this morning, swung it like Thor, and knocked everything out of place. We have Carney speaking later today in about an hour and 10 minutes. We have FOMC tomorrow at 2 p.m. We have Bank of England on Thursday at 8 a.m. So it's a busy week. It's a busy week for the fundamentals, which is not a bad thing. Not a bad thing. Hopefully we'll see some movement in the market. I do think it's going to be a busier summer, so we shall see. Let's go to the Kiwi, right? Because Gabby's here. Let's talk Kiwi. Kiwi, all right, let's start with that IPDE process we always talk about. Let me write down NZD USD 103. We identify that price action has come to previous level of structure. Gabby says Z's. I actually have something that could be interesting on the Kiwi. We're at previous level of structure. We're at one of those tricky places that I don't really care for, where we did break the higher level of structure. But we're still above the lower level of structure. So it's a really tricky place to kind of anticipate where to get long from. And in this case, I always prefer the lower level. But because we have that higher level, it really interferes with profit taking. But I do have something that would be interesting. And just looking from this daily chart before we go down, right? Just looking at the higher time frame, guys, right? As we look at the higher time frame, on this higher time frame, where would you predict that price is likely to go to if we were to rally up on this higher time frame? So take a good look at this higher time frame. If we were to rally up right now, where would we go to? Ha ha ha. Raymond says 65.50. If you guys are basketball fans, NBA fans, that was the funniest thing I've ever heard in my life. Anybody familiar with Kawhi Leonard? I don't know how much you guys care about American basketball. He just had the funniest moment in NBA superstar history. Raymond says sadly, yes. Yeah, he mocked his own laugh. It was the funniest, maybe recency bias, I think it was the funniest thing I've ever heard. When you can make fun of yourself, that's great. It was hilarious. Gabriel says 6662. I see 65.60-ish. So in this area. Al says bottom of the long wick looking left. So in this area. So in this area. So the point is, there is room to go higher from where we're at right now. Currently, we're sitting at 65.07s, right? You guys are predicting that if we were to move up on the daily here, we could move the 65.50s, right? And higher. Apparently, he does have a personality. He's a fun dude, Raymond. He's a fun dude. He keeps telling you guys. No one believes him. For you guys unfamiliar, Kawhi Leonard is he just won the basketball championship, and he's the quietest superstar out there. He doesn't really talk. He doesn't really show emotion. People think he's part Terminator, which I believe in the robot apocalypse, so he very well could be. But he got caught out earlier this year. He has a very awkward laugh. It was like he was looking and he's like, I don't even know who asked that question. Like it was one of those laughs. And, this robot never laughs. So people were making fun of him because that's his laugh. He's like, yeah, I'm excited to be here at Toronto. And, I know I get a lot of criticism. And he was trying to look what reporter gave him the question. He's like, and I'm doing this. And he's looking around. He's like, I said, right now, I don't even know who's asking this question. Like it was one of those type deals. So everyone, it was, it went viral because blah, blah. So he got made fun of it for the entire season. And as he's giving a speech at the championship parade yesterday, he was giving a speech and blah, blah. He's like, yeah, I told you I'm a fun dude. And he just purposely, he said, aha, ha, ha. And everyone went crazy, basically mocking his own laughs. It was great. It was awesome. To see him do that. Because you would, he's a fun dude. But we could potentially go higher here. One of those dry personalities, yeah. We could potentially go higher here. So that's something that we can just keep in the back of our mind as we get down to the lower time frame. If we were to reverse at this level of previous structure support, wrong chart, Akil, there is room to push higher. So let's go down to the 4 hour. If you get a chance, Google that laugh. And here's what I will be looking for, right? So we haven't quite double bottomed here, but we have started to consolidate a little bit and maybe a little clearer. Let's just jump straight to the hourly. It'll be a little clearer on the hourly chart. But here's what I would look for. Well, it looks like we may not be getting it. I would look for a violation of this level. And we tested it this morning. We did not break. We may be going into a channel. Who knows? But I would look for the break of this level, of this structure high. And if we can break that structure high, look for a chance to go higher. Now on the hourly, you're going to have a different type of kill zone, right? A lot of you guys are looking at 65.50s, which I thought was a great area. The kill zone may shrink a little bit depending if you're someone that's conservative and takes a look at the bottoms or the tops. But if we can break that level to the high side, there is a good chance that we can go higher. And unfortunately, this looks like there may not be a lot of room in there depending on how it goes from a swing trading perspective. From a day trading perspective, we can always have something that if we break out, we don't go directly to that level. We could retrace and look for a move up, but it does look like it's going to be slim pickings. This isn't a 50% retracement to the best of my knowledge, if I remember correctly. It's a 382. So, yeah, so not a bat pattern either. So, not as great of an opportunity. I thought there was more room on here. There isn't really. So, that's going to send New Zealand dollar out the way. Let's go to Aussie Canada. Yeah, it's one of those things. If we just go back to New Zealand dollar real quick, it's one of those things where it's just not a lot of potential for movement. Here's the thing, right? Because this zone is a little bit, it's deeper than what we originally thought it on the 4 hour. If we break out of these highs, right? If we break out of this level, we're likely to break to this zone. And that level should actually be a little bit higher. If we break out of this level, we're likely to break into that zone, that 65.30s. If we break into that zone, that's the move that I would expect. Like the move I would expect is into that level. So it's one of those situations where the move would already have been made. And you can see the market just drying up before the Draghi speech, as expected. So it's one of those things where if we break out, the move is going to be already made. There's going to be no room left for us to actually, or for me to actually get involved. So we shall see. All right, let's go to Aussie Canada. And then Gabby says pound yen. Let's not talk about the pound yen. Is that a sexy zone on the 240? A double bottom would be sweet. We can look at pound yen next. Stupid pound yen. Taking my pips. You took my pips, pound yen, and I want them back. I want them back. I've been in a horrible drought lately. Hasn't been good. All right. Aussie Canada on the daily. We're slowly drifting lower. If you guys remember, we have multiple levels of structure here. We had the little spike here. We have a little spike lower. One of those opportunities where we have two levels of structure. Whenever we have two levels of structure, which one is going to be the more important one? The lower one, right? So for a buying opportunity, I would wait until 91 cent is hit. I would wait until the 91 level is hit before looking for a buying opportunity. I had Head and Shoulders on my radar this morning. Let's see if that still exists. We did have a break and close below that first level. You can't really see it on the 240, but we did have a break and close below that first level here and a pullback. Going down to the 60, if we're going to get some type of reversal, you may want to look for a potential Head and Shoulders. Right? You can see it happening already. You can see the potential left shoulder, the potential head. May turn into a right shoulder. We do not know, but very similar to New Zealand dollar and I guess more similar to dollar Canada. If we can break 91.95s, we should see a shot higher. We should see a shot higher. If we can take those highs out, we should see a push higher. And I would anticipate a push. There's no real level. There's no real danger level that stands out to me. Maybe 92.10s. But I wouldn't be surprised to see a push up to 92.30s here on Aussie Canada. Now keep in mind the Aussie Canada is a very small pair, right? This massive move from here to here is only 35 pips. So the range on this pair is very, very minor. So keep that in mind. But that's what I would look for. I would look for that shoulder, that potential neckline, I should say, to be taken out, that level of structural resistance, and to look to see if you can get a move higher. From a trend continuation standpoint, at this level, you can look for shorts as well. You can look at this as a pullback trade in the previous structure, consolidation, not the previous structure. and then looking for a potential pullback opportunity. You can see another, look at that, another mini head and shoulders down here, which exploded up. If you're looking for shorts, you can look at this as a double top and a chance to trade it lower. Questions on Aussie Canada? Let's go to pound yen. Gabby wants to look at pound yen. Does anyone want to avoid looking at pound yen? Let's look at the beast on the daily. And let's go through the 4-step process. So identify. What do you guys identify here on the daily chart of Das Beast? Latch says at wick support. At wicket support. Gabriel says a bear cipher. Oh, you know what? Heck, yeah, I didn't look at that. Yeah, it definitely could be a bear cipher here on that daily. No 3D2. That would be a bull cipher. A bear cipher? What did you smoke? Where are you seeing a bear cipher at? Anybody? Here on the daily, bear cipher? Oh, bear C equals consolidation, no ciphers. Okay. Well, I wasn't supposed to know that. When most people type in C, it means cipher. Right? And that was my first thought when I saw C. I thought C meant for cipher, especially bear cipher. Stay off the weed. So most recently we have a lower low, lower close, right? An obvious bearish push down. However, as Latch mentioned, we are at the wicket level. And we sound like a broken record. I've been saying this all year. At this level, I mean, you could look for shorting opportunities. I think it's just very difficult to project targets because we have no idea if price will go lower or how far price will go lower before reversing. So if you're going to look for trend continuation opportunities to the downside, I would just take a very cautious approach. You do have bearish divergence in the market. It doesn't really mean much right now, though, but it's there for you guys that like divergence or bullish divergence, excuse me. So it's yeah, it's tough. These situations, I'm not very interested in anything. I can't really make a reason to get short anything long term because I don't. We're in that zone where we can reverse at any second. I don't really want to get long either because we can push all the way down to 131s before we continue long. So I don't. This is basically a situation that for me is just I just avoid it until I get a clear picture. I just avoid it until I get a clear picture. But let's go down to the 240 chart. 240, you can see, again, the lower low, lower close there. Let's head down to the 60. Now let me ask you, Gabby, what makes you look long at this particular level versus a different level? Or would you be looking for double bottoms anywhere within that wick? So if we get double bottoms anywhere within this zone, you're looking to get long. Double bottoms anywhere until here, till 131.43. So if we get 18,000 double bottoms, gotcha. Latch says target projections. Yeah, I mean that's a big zone. In my opinion doesn't matter. We each have our own trading plan, but that's a for a counter, for a counter trend approach, that's tough for me to see. Because keep in mind the difference between counter trend trading and trend continuation trading is trend continuation trading in general, like a trend following trader, you're looking to hit small win percentage, massive risk reward, right? So you're not looking to win a lot. You're trying to get in small risk, get in small risk, get in small risk, and then when you hit that move that finally catches the train or the trend, you ride it and you make up for all those losses. Counter trend trading is a little bit different, right? Counter trend trading, we're not looking for that long train ride in most cases, right? You're looking for kind of the short train rides, which in most cases you want to be a little bit more precise with where you're looking to get involved at, because you're not. It's less like just kind of taking a shot and seeing what sticks, and more about being precise. So it's interesting, but I suppose if you're with very conservative target taking, you can have kind of the same effect. But it's a big zone to be taking a lot of. I mean, it's a 400 pip zone to be taking longs at. I mean, that's a lot of potential swings and misses, especially when you take into account that in not all situations, but in many situations, a trending market is going to provide a double bottom. Again, not in all situations, but if you think about how price trends, right? What happens each time we get here? Well, we put in a little bit of a decision point, which can potentially be a double bottom before it's eventually broken. So it's a lot of shots in here. Again, that's just my personal opinion. I don't say that to affect anyone's trading or anything like that. But that's a big zone. Depends on the higher time frame. Higher time frame. Shh, not higher time frame. Shh. Damn it, we lost George. I knew it. Fart. Depends if I need to wait for 2618. And right now, all filters tell me if double bottom prevents itself, and I have divergence. Then its shot is shoot and fire. Next double bottom may present itself again. Filter need to be met. I like to short just above 136s. Yeah, and that's the thing. I would lean towards that, Keith, as well. Mainly because at least with trend trading, I can take a chance. And what I meant was, if you want to be conservative with your trend trading, let's say, Keith is looking for a move to say a retracing back here above 136s and then a move lower, right? Because if you look at this, right, if I'm a trend trader, let's just go down to probably go down to a 60-minute chart. Something like this, right? Or a 4-hour chart. 60 will make it look more clear. I can see clearly now. Depending on how let's put it like this, right? If I wait for a retracement to here, 136 even, right? I've got a situation where I can do something like this, right? Let's say I have a wrist that looks like this. Right? Nice small wrist, just the way I like it, right? Now, in many trend continuation scenarios, right, you'd want to have, or trend following scenarios, you'd want to have that target, right? Now, you can take targets off at different levels, but you can say, okay, well, I think the market's going to go to one blah, 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 like that. You have a very good risk reward. Now, this situation is a little bit iffy because, as I mentioned before, due to that wick, I can't tell you where price is likely to end at. There are some closes on the lower time frame that we can aim for, don't get me wrong. But here's what I can do, right? I can say, I can take conservative first targets. I can also manage that risk very easily. So as price moves in my direction, I can manage that risk so that I'm basically rolling I'm eliminating my risk. I'm rolling my stops to break even. But let's say we take a very conservative approach where we just look for a retest of structure, right? We look for the double bottom, right? We just look for the double bottom with initial targets. I can keep a secondary position on just in case. So I can say this is where I want to get the bulk of my position off at, or even half, right? No, double bottom down here. So it would be like price would do like that. So it would give you a double bottom. I can take half my position off here, and then I can implement just a trail stop method for target twos. Does that make sense, guys? I can say that I'm not going to have a set target two, or maybe I do have a set Hail Mary point for my target twos, but I'm just going to trail if this thing continues to trend and go lower, which we may know about in 45 minutes, right? I'm just going to continue to trail and trail and trail and lock in profits until we eventually reverse and stop me out. And that's a method you can take as well, because you know that price could go all the way to 131s. That's the end of our zone. Is it likely that that's going to happen? Probably not. And again, this is assuming you don't pinpoint a place within there. I think we probably can pinpoint some closes on the 60 and 4 hour. But just using this as a general example, you can just trail and hang on. Just continue to trail that stop, however you do it, whether it's structure, whether it's a parabolic SAR or something like that, and you trail it until you're stopped out. And that is a fine method. Now, again, in my opinion, the key is two things, right? I would take some profit off at a very safe place. I always like putting profit in the pocket. That's how I get down. And I would try to get that risk to break even. And I guess that's the most important thing. I would get that risk off the table as quick as possible within my rules. Because now you're playing with house money. Once that risk is break even, you can't lose anything. Now it's a little bit easier to kind of, quote unquote, take a shot. And because the risk outweighs because the reward outweighs the risk so much, you can do this a couple of times. And again, you can fire off 4 shots and have, one winner out of those 4, right? 3 losses, 1 win, and still be in a break-even place. So I don't think that's a bad way to handle this type of situation of uncertainty. Lat says, I've been shorting quite a few in the wick zone daily based off the 60-minute just because of the close. Yeah, if you go back on the closes on the 4 hour and the 60, you do have some lower levels you can shoot for. Yeah, so I think that's what I've been looking for. That's what I'll continue to look for here on the pound yen. And of course, that means you can go down to lower time frames. You can go down to range bars. All of that fun stuff. You can see a nice structure shelf here has been created. Look at this structure shelf. High and tight, I guess low and tight flag, right? Lower time frame trader, again, be careful with the news today coming out in 45 minutes, but you can look for opportunities at a retest of this shelf. I don't know if it's going to be clearer or worse on the range bar chart, but I mean, there you go. Nice little structure shelf right there, yeah. Shoot, if you're aggressive, you can sell right now. Questions on pound yen? Euro Aussie next. That was the last pair on my watch list. So we'll do that one, and then we'll kind of, if you guys have a specific pair you want to check out, let me know. If not, we'll kind of just, we'll run through the flunkies and see what they have to offer. Euro Aussie, obviously Euro pair has been moving, so this was a pair we've been looking at for a while now. You can see daily chart. Today's Draghi's hammer has affected how this chart looks. Big spike to the upside. Bearish candle forming to the downside. This was another level we spent a lot of time on last week where I have zero interest in getting long. I have zero interest in getting short. 0, 0, 0. Keith says more long wicks. Yes, yep. It's been that type of year. Was it like January 7th it happened? Beginning of the year. It was before I even started trading for deer. Looked at it, I'm like, well, this year's going to stink. And lo and behold, this year has stunk. So that prediction was right. Hopefully the summer makes things better, though. George said, yeah, you know, and that's my thought process too, George. Could be worse. I could be in the negative. And when you're floating in a negative, that opens up all types of other demons where it's like, gotta make it back, gotta make it back, gotta make it back. So I'm not complaining. I understand I've been doing this long enough that I understand that there are different type of years, you know. And sometimes you just make the best of it. I'm a Philadelphia 76ers fan. I understand the process. Just like the process the Golden State Warriors will be going through next year, unfortunately. But we'll see. We shall see. All right, so Euro Aussie on the 240. Why did I have this? I was just looking for a move back into structure. There's not too much of interest here. Which probably shouldn't have been on my list at all, actually. But looking forward, there would be a potential structure buy down here if we came into this lower zone. But this probably shouldn't even been on my list. There's really nothing appetizing here for me. And the Raptors number 2 is not staying. Interesting free agency, man. Kawhi might leave. Durant's out for a season. Klay Thompson's out for most of the season. Anthony Davis went to the Lakers. Where is Kyrie Irving going to go? Does anybody want Kyrie Irving? I wouldn't want him on my team. Sixers, 2 big free agents that might leave. The soap opera. From a business perspective, I love what the NBA has done. From a business perspective, I love what the NBA has done. The NBA has a distinct advantage over football, which is supposed to be our most popular sport here in America. Helmet football, right? The thing about football is nobody knows what these people look like, aside from your quarterbacks. Nobody knows what most of these people look like. The NBA has embraced the personality of the players, and they've embraced kind of the drama of Twitter beef and all of this stuff. And it's basically, it's more of a, for the normal fan, it's NBA. For the casual fan, it's a soap opera. Think about your favorite soap opera, right? What, General Hospital or something. I have no idea what happens in General Hospital, but I'm assuming it's in a hospital. And they leave you with this cliffhanger of someone's dating someone but had a baby with someone else, and now they're in the hospital being operated on by the ex-boyfriend whose baby isn't theirs, and then it gives you a commercial break. Find out in tomorrow's episode. And it's like, NBA's the same way, right? We have all these people going into free agent, but free agency doesn't start until, what, July 6th. What will happen? Find out July 7th. Right? Meanwhile, the NBA season just ended, right? They're going to start again in October. We are going to be talking about the NBA until October starts. And that's what you want, 24 access. Very similar to like they do it overseas with soccer. The transfer window is massive, right? And because of that, people pay attention all year round. And that's what you want. You want people talking about your sport all year round, right? We haven't mentioned football in a while. Football ended in February. We haven't really talked about football that much. Football used to dominate. Now everyone's NBA. Very smart what they're doing from a business perspective. They're just staying in the news. Staying in the news keeps people involved, and I got to do something about the problem is their best player, well, their most popular player plays on the Lakers, which kills the East Coast, hurts the ratings because no one on the East Coast is staying up till 10:30 at night for the start of a game. That's something that they have to do. But you also can't start those games at 7 because no one in LA is going to be able to get to a game at 4 o'clock. So that's a problem. But I don't know what you can do about that. But interesting. Drew says, "Hey, Akil, sorry to bother you. In your recent Trading Edge video, you referenced averaging in." I did? Are you sure I did? I feel like I did. But I did see that question come into the podcast with Mike. You moved LA to Central America. In your recent Trading Edge video, you referenced averaging in, and in your podcast, your guest mentioned averaging down. Could you explain this terminology? Basically, just it's building your position in a trade. So instead of entering a trade at a single point, what you're doing is you're building your position either as the trade goes in your favor or as the trade goes against you. So think of it like if I wanted to buy what are we looking at? Euro Aussie. Instead of just buying it all right here, I would buy a third of a position here. If we dropped lower, I would buy the second third of my position here. And if we dropped even lower, I'd buy the final third of my position right here. So getting cheaper and cheaper price points. And making my average position instead of right here, if I bought everything, making it somewhere in here. Make sense, Drew? Not a method I use, which is why I don't think I said it in a Trading Edge video, but I say a lot of things. I know Mike might have mentioned it in the interview I did, but that's what it would be referred to. In fact, you know what, I might have said it. I probably did say it. Did we talk about having multiple patterns? That's the only time I think I would have said it. If you have multiple patterns, instead of choosing one over the other, entering both and averaging your position in, that might have been it. That's the only time I think I might have said it, yeah. So I might have said it if we were talking about like a bigger pattern and a smaller pattern. And instead of taking one or the other, you put half of your order at the lower one and half your order at the other one, then it averages you into a position. That's probably what it would have been now that I think about it. I think I did receive that question from someone. Yeah, there we go. Yeah, that makes sense. Yep. So basically averaging in a position by buying at different points. And you'll see people do different methods. Some people do it as price moves against them. Some people do it as price moves in their favor. So they'll enter, let's say you get an example where you enter half a position here, right, at a double bottom. And you know that a double, and again, don't take this literally, right? Just imagine a double bottom. You enter half your position here. Now, what would give you confirmation that a double bottom is working in your favor? A move above these highs, right? Taking out these highs. So you enter half your position here at a quote unquote more conservative place. Give me 1 second. I want to write all these down in my notes so that way I can post with you guys. Right? Taking out these highs gives you confirmation of that it's working. So maybe you put like a sell stop, or excuse me, a buy stop right here, and you enter the rest of your position like that. And you can do the same, or you can wait for a 26.18 and buy more, something like that. A good example may be in the, we just spent some time talking about the pound yen, right? And we drew this out, this whole kind of scenario of trending. I mean, you can look for the same thing here. If you have a massive projection, right? If you're projecting that price is likely to continue lower, I mean, you can do this where it's like each time we break a new low, you sell some more. Or maybe you sell here and then you sell here, you take half profit off here, and then as we retrace, you sell some more. And then you take half profit off there. As you retrace, you sell some more. And you continue that kind of sell, take profit, sell, take profit, sell, take profit until the trend has ended. That's more of a classic kind of trend continuation type of move. Now, if that doesn't make sense, I know that's kind of confusing. We do talk about this in the day trading course, about just different ways of kind of active trade management. So it may be worth going to that course and taking a look at it as well. But that's another method, and that's more of like a true trend trading method where you're not looking to be in and out. You're looking to catch a trend and you're looking to ride it. Right? You're looking to ride it until it ends. The trend is your friend until it bends and ends. Last says that's something I can see myself doing in years' time, adding to my quote-unquote best trades as they do. Yeah, it worked. Again, and why I put it in the day trading course, because it works with that type of scenario. I mean, if you're looking, do we have any scenarios that are like that? We don't have any blatantly obvious euro dollar, maybe the closest one we have, blatantly obvious trend continuation scenarios. 112, 111. Euro dollar is the one I can think about. Do we have any other blatantly obvious trend continuation situations? Let's cat it New Zealand yen. These are all wiki pairs. But maybe they'll provide an example. All right, so Swiss. May have to make one up. Yeah, these all aren't the best scenarios, but again, let's go back to euro dollar, because that's the one we talked about earlier. If we look at, in my opinion, the best scenario to use it at would be one where, again, you have a massive amount of room to the downside, and you have a pretty good projection that we're likely to continue this lower, and then you just look on a range bar chart, or whatever time frame you want. It could be a 240 chart, whatever, and every time something like this, every time you get kind of a pullback or ebb and flow in the market, you just take some profits. So let's just say you entered here at the break, right? Here, right? You take some profit, pull back, enter another position. Take some profit, pull back, enter another position. Take some profit, pull back, enter another position. And you keep doing kind of half on, half off, half on, half off. It could be 1/3 on, whatever your combination may be. But you keep doing that until you get to your ultimate destination. So what you're doing is you're banking profit, and then you're adding on at a next signal. Now I would prefer to add on at a pullback. That way you can control your risk a little bit more. If you add on a breakout, you can potentially put yourself in a riskier situation where you may be giving back some of your profits. Typically, if you added a pullback, because your risk reward is so steady, you're not going to give back too much of your profits. But it's a trend following system that would play out pretty well. Obviously, if you're doing it lower time frame, lots of active management. Lots of active management. But you can do it longer term as well. Great method for the stock market. We talked about it with the AMT stock we're looking at a few months ago, right? American Tower Corporation, where we called the buy here, right down here, right? So one of those situations where you look at this, right? The buy was down here, right? And each time it was, I think higher time frame, easier to look at this, but each time, like, right, take some profit at the extension, right? You add on to your position as it pulls back and gives you a cheaper opportunity, right? You buy a little more, and you don't even have to take profit. You can just keep buying more if you want, until it gets to your ultimate destination. So it's a good investment approach, in my opinion. I would use it more. I would use it more in the stock market. I used to do it as a stock trader, not the same way because I wasn't technically based. But it's a good method in the stock market because, especially if you're trading the indexes, there's a lot of reversion to the mean, and those levels are very important as far as offering buying opportunities. Real quick, Euro Yen. We got 30 minutes before Carney speaks. Euro Yen starting to break a little bit, potentially breaking lower as well. So could be looking for that selling opportunity on Euro Yen. Take care. Yeah, Aussie and New Zealand are both good examples. Now they have those dumb wicks, but they're there. All right, let's blow through some charts, guys. If there are pairs you want to take a look at, let me know. If not, we're just gonna blow through them and see if we can find anything and call it a day. I've got a workshop to go to in about an hour from now. So I have to put pants on again, guys. This is 2 times in 2 weeks I got to wear pants. Not liking it. I'm not liking it. Goes against my rules. This is why I became an entrepreneur. I didn't like wearing pants. No, sir, I don't like it. Yeah. Don't do it. Just go. Dollar yen, look at that. Big test of these lows. No bigger interest here in the dollar yen, though. Looked at Canada. Aussie dollar. Aussie dollar is another one where it's, again, we're in trend continuation mode, but you have that big wick, so it's interesting. So Aussie dollar is another one where it's like you can take a shot. Just who knows where or how far this thing is going to go. You can also look for head and shoulders as well, obviously, here with Aussie. But you can look for a trend continuation trading opportunity as we pull back in the structure. It's there. Aussie dollar, not Canada kill. You just want to be cautious. There's not a clear extension place, but look for trend continuation scenarios as we come back into structure. Maybe you get an opportunity to ride it down. Looked at Euro Aussie. Pound Aussie. Pound Aussie is a horrible looking pair. What has happened to the Pound Aussie, guys? What is this? This used to be one of our best moving pairs. What the heck happened to it? Look at this. Gosh, welcome to the chop. This is disgusting. Right? Horrible. Euro Pound. The molasses pair, moving like molasses. Good call on this a couple weeks ago. It takes forever to do. Euro Canada, another stinker. Another stinker right there. Euro New Zealand. Cipher Euro New Zealand. 1 hour. Perhaps. Check your data. May or may not be a cipher, depending on your 127, depending on how you view this as an X leg as well. Check your data. Euro New Zealand may be a cipher for you. Can check your data, check your eyes as well. Certainly not it's an iffy one in my scenario, or in my case. Again, Aussie yen, New Zealand yen. These are ones that still have trend continuation opportunities, right? Same thing. I mean, we're trading at structure at the wick, but who knows what can happen. A higher high, higher close here, however, would be a good sign of some bullish movement here. So if we saw a higher high, higher close here on the Aussie yen, I would project the move back up into this level, back up to 74.35s. Again, not a lot of room here. It's a small ATR pair, but wouldn't be surprised to see a movement up. Drew says, sorry group, last question. Nikhil, what's your opinion on using bigger leverage to your favor in trading for big returns compared to an account you're trying to grow and compound? For example, if you were someone who could afford to blow a few $1,000 account and you wanted to over leverage your best opportunities for maximum returns, would this be more gambling mindset in your opinion compared to trading? I'm always seeing all these monstrous lot sizes dropped on social media, and curious if this was possible. Curious if this was possibly the trader's mindset, and maybe they had separate trading accounts where risk management was used in different strategies to compound growth as the goal. Easy answer. Those traders are stupid. They're stupid. That's what it is. First of all, right? I don't care how much money I have, right? I can never afford to blow anything. If I want to blow something, be very careful there, Akil. If you want to blow something, I'm going to go to the casino. Right? I'm gonna go to the craps table. That's my game of choice, and I'm gonna blow money. And for me, it's not blowing money. It's using it for entertainment, right? I find entertainment. Never take the free drinks. I find entertainment by going to the casino and just engaging with the people in the element of gambling. Now, I hope to win, don't get me wrong, but I basically accept whatever money I bring to the casino is going to be lost, right? It's like when I go to the amusement park with my kid, right? If I bring a couple $100 to the amusement park with my kid, which I wouldn't, I assume it's going to be gone because I'm going to buy him stuff, he's going to eat, and whatever. Trading is my business, right? So I can never afford to do anything. So I think if you're using smart position sizing, your leverage should not matter. That's always my opinion on it. We've had conversations with this in the past where they've just, I haven't paid attention. I know they were making leverage changes in the UK. I don't know if that happened or not. And everyone was flipping out. And I said it shouldn't affect your account at all. Because if you're using proper leverage, you're never using your 1,000 to 1 leverage anyway. So I think it's stupid. I do think it's a way that you can grow your account very quickly. But it's a way to blow your account even quicker. And that's what you see most of these internet traders do. They post all their stupid screenshots of their stupid wins, right? 1 month, and then you don't hear from them the next month because they blew it all. And that's not you can't sustain that. You wouldn't want to be like that as a business, right? What business is high risk all the time? It's a gambler's mindset. So I think it's stupid. I think if you're going to be a successful trader in the long run, you need to treat your trading like a business. If you want to treat your trading like a business, the number one key is going to be risk management. You should be in a position where you never go broke. I need to take 200 straight losses to go broke. I did the calculations a few years ago, right? I need to lose 200 times in a row in order to go broke. I can tell you a secret. I am never losing 200 straight times in a row. Now, Akil, you never know what the market will do. Maybe it will happen. No, it won't. If I get to 150 losses in a row, I'm probably stopping. There is a max drawdown in place, right? Once I hit my 30% max drawdown, I cannot trade. I am not allowed to trade. So it will never happen that I take 200 straight losses in a row. So you can tell I'm fired up because people, it's a mindset that has snuck into many newer traders' minds. And I can't tell you how many times I get the question where it's like, hey, Keel, you say that if you're a good trader, you're considered a good trader if you can average 2% a month, but my friend over there is making 20% a day. And I'm like, yeah, it's not realistic. No, it is because he's doing it, blah, blah. And I try to tell these people and they don't believe it. They're sucked into this hype that 20% a day is the norm. And it's stupid, right? It's stupid, right? Because if you do the math on making 20% a day, how rich would you be in a year? We'd all be billionaires. We'd all be the richest people ever. And I'll tell you another secret. If you were making 20% a day consistently with no risk of like going broke, would you be on social media posting it? No, you would be on the payroll of the richest man in the world, growing their money by 20% a day more. So it's not sustainable, and it's a poison. So my answer is no. I wouldn't. First of all, I can never afford to blow a few $1,000s. I think that's a stupid mindset. And I spoke to a trader on the chat about that. I'm not sure if he ended up doing a premium membership, but we were having a conversation about trading live, and he was like, I'm going to trade live a little bit. I'm like, well, no, you should probably learn first, and then after you learn, do your back testing. After you do your back testing, do your demo. And after you do your demo, then play live money. He's like, no. I got a lot of money. I can afford to lose some in the market. I'm like, can you? He's like, oh yeah. I make this much a year, 6 figures, whatever like that. I can afford to lose a couple thousand playing around with it. And it's like, okay, well, I don't understand that mindset, dude. I can't afford to lose $1, right? I can't afford to lose $1. Like I get mad if I lose $1. Now, if I'm blowing $1 on like candy, if I'm purchasing something that's different, but I don't get that mindset. I can just afford to lose money. There are other people out there that need your money, right? I can just throw $100 away. Now, donate to a charity. Help someone out. Donate to some of the traders on the platform. Yeah, I get that. So I don't get that mindset. I don't think any. I shouldn't say that, but I would guess that most business owners and most entrepreneurs don't have. Most of the wealthiest individuals in the world don't have that mindset. One of the reasons they became wealthy and not rich is because of their frugal mindset, where they are very stingy. Some of them a little too stingy. If you guys remember the basketball player Scottie Pippen, his nickname in Chicago was Scotty No Tippin' because he wouldn't tip anything. So a little bit too stingy in some cases, but yeah, so it's a big no for me. I see no reason to ever recklessly blow your money. And here's the thing as well, the comment said, hey, what if you maximize your leverage on your best opportunities for maximum results, right? Best opportunities still lose. You guys do understand that, right? Because guess what? I'll tell you what, if best opportunities never lost, right? If your best opportunities never lost, why would you ever take another opportunity? If I had my back testing results and I had my best opportunities and I had a way that worked all the time, I would never trade any other way. I would only trade the way that worked all the time. And by doing so, I would be able to adjust my position size within my risk ratio. But I wouldn't over leverage myself, because all it takes is one bad trade. Right? All it takes is one bad trade with over leverage and you're done. Now, if you've consistently decided to trade a specific position size consistently and that works with your best opportunities, that's a different story. But I certainly wouldn't bounce back and forth between over leveraging. You can trade different position sizes, Drew. You can trade full positions on your best trading opportunities, half positions on your less than best, right? For you guys that saw the Q&A yesterday, we talked about that, the CTS, right? Changing position sizes based on your score. So you can do that. But yeah, I think over leveraging is just a bad idea. It's just you might as well give your money to me, and I'll give it to my favorite charity, if that's the route they're going to take. But unfortunately, it's a poison that is seeping into the trading industry under this whole get rich quick kind of deal. George says, I will be your favorite charity. Give it to me. I will use it and I will teach others. Yeah, so that's a good way to end. Any other questions, guys? I gotta go find some pants. Any other questions before we close down shop? All right. I will get this up to you. Obviously, it's gonna be later than usual because I'm gonna be out of the office for a little bit. But I will get it up to you tonight. There's a podcast coming out tonight as well. I don't know what it's gonna be on. However, I haven't set it up yet. But pleasure as always. Good questions, and I'll see you guys tomorrow, same time, same place. Again, 10 o'clock. Mario Draghi is speaking, so just keep an eye out for that. All right. Take care.